Okay, we had the CPI report that came out today. Came in still hot at over 8%. The market initially sold off, then it rallied, then it sold off, tried to rally again, then it's just kept on selling off. Guys, the S&P 500 was down, what, 1.7%. The NASDAQ, it was down 3.2%. And then you had another 1.7% or a 2.5% sell-off and the Russell 2000. So it was a really, really ugly day. Another crazy bad day for this market here. You have multiple things going on here. Breadth is really horrible. The NASDAQ on the year, NASDAQ 100 is down 27% on the year. 27%. I mean, that's incredible considering the fact that we're only in the month of May. One of the things that's kind of getting me a little bit surprised here this week so far, at least, yesterday and today, we're not seeing much of an attempt at a rally. We were up in the pre-market, but as soon as the CPI came out, it seemed like it put all hopes for a rally to bed. And we're at a point to where I don't want to be shorting the market right now just because of the fact that you do get counter rallies, big time counter rallies to the upside in a bear market. Some of the most ferocious ones that you'll ever see are in bear markets. And I don't want to be caught, initiating new excuse me. I don't want to be caught initiating new short positions when we're at extreme oversold levels. I think the NASDAQ is like down over 10% just in like the last 3 or 4 day trading sessions. So massive moves to try and get short at this point is really bad without some kind of like counter rally. I really thought that maybe we would see that with the CPI report, as long as it wasn't cataclysmic, that maybe it would rally a little bit, but that did not happen. So it's really wearing on a lot of people right now with trading. For me right now, I'm 100% cash. I wanted to get short last week on QID on Thursday. I had the trade set up out there. I pulled it because it was just running too hard there at the beginning, and I don't trade in the first 30 minutes just because the movements in the stock market are far too unpredictable. So I like to wait till the first 30 minutes passes. But by that point, last Thursday, the market was already like throwing my whole risk reward parameters out the window. So I was like, I'm going to have to hold off until we can get some kind of like a bounce back. But since then, we haven't gotten anything. So it's really been a test of patience for me. I've yet to even make a single trade in the month of May. I don't know the last time I went that long without placing a trade to start a month. I mean, it's just been a real long time, and it's not normal. I mean, this is like very, very unusual. So, it's for me, I even, here's the other thing. I actually put a long setup out there in the trading block today. I was like, okay, let's see if SPY can get back above 406.42. If it can, I'm willing to get long at that point. I'm willing to try to play the bounce because we're in a declining channel, and I'll get to all that here in a second. And by the way, make sure to post your charts and your questions that you want me to go over, and I'm going to go over it for everybody. Make sure also hitting the like button, pounding that like button, hitting the subscribe button so you can be notified of future videos that I'm doing, like the one I did on Monday, like the one I'll do tomorrow, and these Wednesday live streams. And there's posts throughout the week as well. And click the join button if you want to get all my stock market research each and every day. So with that plug out of the way, I was willing to get into SPY at 406.42, but I wasn't going to get in before that because we're in this like 3-day consolidation range. Didn't want to do that. And I was going to put my stop loss below the week's lows. So what happened? Nothing happened. The trade never triggered. So to my benefit, it didn't trigger as well. And I just stayed on the sidelines again today. So there is like this, it would seem like it would make sense for us to get a little bit of a rally here, but so far it's not materializing. And I think that's really frustrating a lot of traders right now. Even being in cash, it's kind of annoying. So, because I want to get back into the market and I just can't even do it right now. Let's go ahead and look at, boy, you guys have got some comments going on today, man. That's great. That's great. We're going to get to all of it here. I already see somebody asking about Tesla. I'm going to get to that. I have definitely, to start off, I'm going to be talking about the S&P 500, the NASDAQ, the Russell. I also want to, I'm going to go through the technical analysis on all those. I also have ARK, I have Tesla, Apple, the VIX, and a couple of indicators that I'm watching for potential market bottoms. So let's go ahead and get to SPY right now. All right, fresh slate, right? too bad we, for a lot of traders, you can't get that on the year right now. But fresh slate. So what am I looking for? Well, there was this head and shoulders pattern that has been playing out for much of this year, right? And the neckline has been really difficult to draw. It's been really it's been a real weird neckline because it just, once we got into this like February and March time period, it got really messy. So you got the left shoulder here, you got the head, and then you got the right shoulder. It's confirmed. Now, here's what people most of the time will do when it comes to, from a textbook standpoint, in terms of where to get in at. People like to get in once it breaks through the neckline. You can see it broke through it, but didn't really confirm. So that created a lot of problems there. But nonetheless, you'll take where the neckline is, which is like 428 against the highs of the market, 480, take the difference between the two and then subtract it off of the neckline, and that's your target. So you have about a target of 376 or so, right about there. So that's where this head and shoulders pattern, if you're following the technical analysis on it, would take us to about the 376 level. But now there's also a few other things that are worth highlighting, and that goes all the way back to the 2009 lows. So most of you guys probably haven't been trading since 2009. I traded through it. It was some wild times, I'll tell you that. But check this out. This resistance level has been really difficult to break through so many times in the past, right? I mean, this trend line that we enjoyed from about 2012 all the way through 2020 was adhered to. Every time we tested it, we sold off. And then we sold off big in 2020, but then we blew right through it. And a lot of that was because of the Fed's easy monetary policies and all the stimmy checks that were going out and PPP and all that craziness. You get through it, and then it's like, okay, we don't need to pay attention to that anymore. But guess what? With this head and shoulders pattern confirming, and now we're testing that support level once again. So does it hold? I don't know. I mean, there's a lot of support levels that are getting broken, but it's worth watching, considering how oversold we are at these levels, to see if we don't get a bounce off of that support level. The next, if that doesn't hold it ultimately, then we got this other support level, and it goes back down to about 300. Now, that'll keep rising each and every day because it's a rising trend line. But right now, it sits at about 300, which would be like another 930 points to the downside on the S&P 500, which, again, if that was to happen, I wouldn't expect that unless there was just a complete stock market crash, like 1987 style. I would not expect that to happen anytime soon. I would expect that to happen, over the course of months and quarters, to where we maybe finally settle at. So 2 massive trend lines to keep an eye on. Now, the other thing that was pretty weird, and let me see, I'll just go ahead and delete this head and shoulders neckline here, but you had this declining channel here. Let me go to the daily chart because it's best seen there. You had this declining channel. They're perfectly parallel, right? Really nicely done, parallel with each other. This is a parallel channels here. They've bounced off, they've rallied, they've bounced off, they've rallied even more, and then they sold off and they tested this lower channel band. And you're thinking, okay, today when we were trading above it, that's also part of where I got that trade set up to the long side and SPY. It never materialized, but that's where it was starting to come from. Okay, we're trying to hold this bottom channel band, but guess what? Blew right through that as well. So this is kind of a do or die moment for the market. Can it reclaim this lower channel band and start to move higher again? Can it hold the support level, or do we have a lot more pain, maybe to the 376 level? And if not at the 376 level, at some point in the future, maybe to the 300 level. So that probably scares a lot of people. I'm not saying that we're going to get there, and I don't know if we will or not. What I'm trying to tell you is that this is what the potential scenarios are if you're trading off of the charts. So that's the S&P. And then I'll look at the NASDAQ here real quick. And this one's even uglier for obvious reasons. It's the tech, and tech's been getting the biggest of the shellacking right now. But with the NASDAQ down 3.2%, down 27% to date, declining trend line. You also had a really nice channel band as well. And guess what? It broke right through it again today. So SPY and the NAS both had similar actions take place today. Can it reclaim it? Possible. And if it does, it could result in a move back up to this 350 level for the short to intermediate range. If you go back to 2008, you go back to 2018, you go back to 2000 dot-com bubble, there's always counter rallies. So that's what I'm really looking for right now. They're not easy. I believe that when you're doing the counter rallies, that at least in my case, I want to be aggressive with the profit taking. So this is an interesting place here that we're at on the NASDAQ. It also has that head and shoulders pattern, but it's just so slanted. I'd rather follow this channel band and see where it takes us from there. You also have a little bit of a support level here that was broken on the NASDAQ here. Actually, yeah, it was broken on the NASDAQ, and but it had tested multiple times. And that's one of the problems that I'm seeing in this market a lot right now, is that there's a lot of old support levels that are getting tested and they're not holding up well, mainly for the reason that they haven't been tested in so long, because you had so much froth that was added to the market post March 2020 lows, when it just completely took off there. There's a lack of support. There's a lack of trend lines. I mean, the NASDAQ especially, there's just not a lot of support. This is probably one of the best support levels from a price support level standpoint that there was out there, and it just sliced right through it today. So we really need to start seeing some like support levels start to develop almost just out of thin air. And then of course the Russell 2000. This one has been probably one of the better ones to chart, just because the technicals lined up so much better. But again, today, and if you go back and almost watch every one of my videos I spent, guys, I really think if we have a sell-off, we're going to test this massive support level that goes all the way back to 2018. I got laughed a lot about it, but I was like, guys, I'm just telling you, man, if this thing pulls back, I think it's likely to test. It's getting really close. So like 168-ish would be that level. We're trading at 171. So if we do see another sell-off tomorrow, we may see a little pop off of that. So that could be also another play to take on if the Russell 2000 bounces off of that level and you start seeing the broader market start to rally ferociously. That could be a level to play. For me personally, I would just be playing IWM. I don't have an interest for like TNA or some of the other ultra leveraged ETFs, simply because on this particular scenario, I just want to be able to control risk more than I care about the profits. That becomes much more of a goal for mine. If I manage, I always tell you guys this, if you manage the risk, the profits will take care of themselves. And so the best way for me to be able to manage the risk on IWM is by doing that. A couple other things too. Nasty selling this week. What is the VIX doing? It's not really that, it hasn't really moved that much. I mean, on a weekly chart, yeah, it's up, but it's well off of its highs. Now from a daily chart, remember this, and I probably show you guys this all the time. It's not breaking through it. This is kind of a divergence here that we're not breaking through this massive resistance level, and we're trading back below it again. We tested it, we got rejected. Tested it yesterday, rejected. Tested it Monday, rejected. Tested it on Friday, rejected. So this resistance level is very difficult for price to break through, as it has been for a very, very long time now. And when it does break above it, it's for a very short period of time. Now, how about Tesla? We had one person asking about Tesla, so let's jump to him here real quick, because that was one of the first ones I wanted to cover today. Need Tesla at 650 so I can get my diamond hands on. Guys, I hate that diamond hands expression. No offense to Mohammed Sherko. I don't mind you using it, obviously, okay? But I feel like a lot of people that are using it, they're saying, okay, I gotta have diamond hands regardless I'm losing. That basically, the diamond hands analogy says I'm throwing all risk out the window. I don't care. I say that I'm wearing a freaking Tesla hat for this live stream here, but oh, and what am I drinking, guys? I got this Thomas S. More. It's not the worst. It's not the best stuff ever either. And I ran out of glasses, so I'm just drinking out of an old-fashioned glass, but it's pretty good. I like it. They age it in port or in Cabernet casks, so it's kind of got that a little bit of a wine taste to it. Okay, so Tesla. Rising trend line. This is broken, okay? This is kind of a known fact at this point. So we're going back and looking at it. You got some support levels here. They're getting violated. They're breaking down. What I'm watching on Tesla here is this February's lows here. So that's going to be about 700. Can it hold that 700 level? If not, things really start to get nerve-wracking there. Then if it breaks through 700, I'm watching this level around what, 550, 560s, 565 or so. That becomes a much more realistic price support level. And right now it's breaking this support level. I just want to see if it can hold these lows from February. If not, there's not a lot of room for it to go, but downward, and the next support level is going to be around this, it keeps changing on me here because I keep redrawing the line, but I got to tighten this line up a little bit. There we go. So yeah, so let's say about 590, 589. That's where I would look for the next level of support to hold. So this one's precarious too. I am not a fan of I like their car, but I'm not really a fan of the stock right now. And then you got Apple. This is the big problem for the NASDAQ today, and this is going to be a really, really, really big problem if this continues. The market can't afford to have Apple sell off. That's just a known fact. Now, you guys, somebody asked me about Apple here. I'll put that one up too. Maybe not. Oh, well, I can't find it. But this Apple chart, really bad here. This is like this whole huge consolidation range here that I've been talking about for a while. If we broke out of this consolidation range, I felt like that would be a bad thing for the stock. And guess what? We did that today. We broke below the March lows. Now we've got some problems on our hands. Where does it start to fall down to next? Where's the next levels of support? You got a little bit of support right around here at around the 138 area. That's, in fact, I can even draw this thing back even further. This is where I'm expecting it to go down to, whether or not that's at the end of this whole market sell-off or not. But even still, going down to 138, that's going to really, screw a lot of people up there on their trades. And that's getting to a point to where it's almost given up like $1 trillion of market cap, because I think 3 trillion was at 182. You start getting into the 130s, you're getting close to a full trillion, I think. So it'd probably be somewhere in the 120s where it gave up $1 trillion worth of market cap, but that's not too far away. So yeah, look for it to get to like this 138, 139 level. It might be a good bounce play. The other thing that was a problem for Apple today, and I've been watching this as a potential long setup, but again, these long setups are not materializing at all. And I'm not a person who only plays the long side. You guys follow me at all. I've been trading mostly short this year, almost entirely short. So this is kind of a new thing where I'm trying to find some dead cat bounce opportunities in this market. But this rising trend line here, it was right there along the lines of this lower end of the of this consolidation pattern from the lot going back to November, broke below that as well today. So yeah, I don't see much. If I'm a betting man, I'm saying that ultimately Apple will see at 138 at some point. So okay. We've gone through VIX, we've gone through Tesla. What about ARK? By the way, I think Cathie Woods is the most overrated investor of our time. I can't even think of a person who's worse at investing than Cathie Woods. I don't know what it is. I don't know why they've propped her up to be some kind of like market magician. I think she's anything but that. But she sucks, man. She really sucks at what she does. I mean, some of the trades that she's done seems like doesn't even make sense to me. But you got this rising trend line that this stock had been on. What did it do? It broke right through it today. So that's ugly right there. Now you're looking at a potential for $33 for it to go down to, and this is a fund. So will they at some point have to shut their doors? I don't know, but I mean, this trajectory going from 160 down to 37, I mean, that's more than 75% of its value, and they still put her on all these shows. Like she's kind of like the go-to expert that we need to be talking to during these times. She's the last person I'd want to talk to during these times. You guys just stick to this channel here, man. We're talking it up pretty good these days. Okay, then, so, okay, ARK, Apple, Tesla, VIX. Okay, T2108 and T2107. These are, oops, come on now. This is a percentage of stocks trading above their 40-day moving average. I usually get really interested in starting to add some long-term investments to the portfolio when we dip down into the single digits. Right now, we're at 12%. This is the lowest reading that we've seen since 1242. Yeah, it's lower than that. Going back to September of 2020. Am I right on that? No, we were lower than that, man. Jeez. Going back to the COVID times, okay? March and April of 2020. So getting into some pretty rare air here, okay? So 2018, we hit, at the end of this 2018 self, we got into like 3 and 4. 2020, we got into like 1% of stocks trading above their 40-day moving average. That's when I like to start adding some long-term investments. Now, the problem here is that we have a little bit of a different scenario here than what we had back then. We didn't have the Fed. We had the Fed on our side in 2018 and 2020. And I know you'll say, well, they were starting to taper in 2020 or 2018. I'm getting my dates mixed up. But they ultimately reversed. They ultimately said, hey, we can't keep doing this anymore. But they were able to do that because they didn't have all the crazy inflation numbers that we just saw this morning. And same thing with 2020. They were able to do an emergency rate hike of 50 basis points. Notice how you've never seen them do a rate cut back then, but notice how you never see them do a rate hike like they should have been doing a long time ago here. So what's interesting, though, if you go back to like 2008, where the sell-offs were much more prolonged, there was multiple times where we hit single digits, but still they were pretty good opportunities to start adding some long-term positions to your portfolio, like an Apple or even just like SPY ETFs. All right. So that's pretty much all I have to go over with you guys. So let's look at some of y'all's stuff here. How low will the market go? Ray asks. We kind of went over that with the Qs, so hopefully you get a little bit more of an idea. It's not about trying to bottom tick the market at all. Nobody can really do that. Nobody can do that, consistently. I don't try to do it. I'm always saying, go for the meat and potatoes. Don't try to get the appetizers and dessert. That's not what we're here for. We're trying to get the big chunks of the rally. We don't have to get the very bottom or the very top. Don't play the hero. That's not what I'm out here to do. I'm just trying to make profits consistently and regularly. We talked about Tesla already. Let's see. Nobody wants Tesla to go that low. Good grief. All right. From Alex. Cheers, Ryan. What do you think the divergence of VIX being down today 1.3% while the SPY is also down 1.6%? I think that was really interesting. And we were talking about that earlier, or just even a few moments ago, how the VIX isn't really pushing through this 35 level. And I do think that that's an interesting divergence. And maybe it's a sign that, okay, the sellers are starting to get exhausted. The volatility is starting to leave, even though you don't necessarily see it in the price action. Maybe there's a sign that we're setting up for a relief rally. If we get a rally in the coming days, I don't think it's necessarily the bottom. I really don't think it is. There's just so much to still go through with this market here. But a relief rally could, help a lot of folks get out of some of their losing positions. And in my case, it could actually help me to get into another profitable position and then try to sell it, towards the end there, not necessarily at the top of the sell, but try to let it go as long as it can. And then when it starts to pull back again, I'll get out and flip short. That's my plan. But, that's what my plans are, and what the market's plans are ultimately are usually completely different. And I have to just align myself with what the market does. So, KB's trading a lot of SQQQ. Really good trade over the last 5 days of trading. However, you just got to remember that if this market does rally again, and there are plenty of counter rallies in the market during a bear market sell-offs, those rallies are going to be intense. I mean, crazy. I mean, don't be surprised if there's rallies in the S&P 500 of 5 or 6% when those rallies start to happen, and it will it'll hit you so hard that your ancestors will feel it. LCID, yes. All of these guys are getting destroyed. So LCID, I actually had this on my bullish watch list this week. I never made any attempts to trade it, but I was just saying, hey, look, there's a potential here that it tries to hold the support level. Can it? I don't know, but in the past it's held it, like what we've seen with a lot of stocks, though. They're blowing through support. Look at SQ. Here was another one that I was looking at from a long-term support level. Can it hold? I always call it square, so I guess it's called block now. It's like trying to call Google Alphabet. It's like, don't change the names once you settle on one, man. But okay, this is the weekly square. I thought maybe we'd get a bounce off of that one today. On the daily here, boom, goes right through it. So there's a lot of that going on. So these support levels are not holding. That doesn't mean technical analysis has failed you. Technical analysis is actually working. Support, that just because you draw a support level doesn't mean it's supposed to hold. If it breaks, it's supposed to guide you to the next level of that trade. Okay, I was trying to play the square bounce, didn't happen. Don't want to play it now because that support didn't hold. LCID, the same situation. It's blown through support so far this week. You look at plug, it's the same thing. You had another support level in plug that looked like, okay, maybe we can hold that. Nope. This week, the market had different intentions entirely. All right, what are market makers? Well, I think a lot of that is like, Wall Street terminology. Back in the day, you had people on the floor and they were like, holding the pieces of paper trying to sell their positions or buy new positions for their clients. And so they would be making the market. And today, a lot of people are just trying to use them as an out for why they're taking losses and everything else, when it really just comes down to bad risk management. Aaron is not liking being in 100% cash. Bro, let me tell you something. Dude, this like being 100% cash right now is one of the best places to be. I wish I was short over the last 5 days. I tried to get short. It didn't line up with my reward to risk ratio, but it's not the worst thing to be in. I mean, I'm telling you, people are losing cash by the droves, in their positions. So the need to trade is usually a bad thing. You got it. It's almost like you want to be forced to trade. Like the market's not giving me a choice but to trade because it makes sense here. I have a solid reward to risk ratio. It's rallying, it's selling off, whatever. The trade setup's there for the taking, but trying to force something that's not there, you don't want to do that. Thoughts on OVV and KMI? Let's look at it. OVV. So oil was way up today, but you're like seeing, OVV here down. Just taking a quick peek at some of the other oil stocks. You had Hess that was up 4.5%, Schlumberger up 2%. So you had a number of oil stocks that were rallying. Halliburton was up 1.25%. Chevron up 1.6%. ExxonMobil up 2.8%. But OVV, not so much here. So you got, and a lot of oil plays, man, they have personalities of their own. So it helps to know how some of these oil plays typically do when oil is rallying, when it's not rallying, et cetera. But it seems like it's failing to hold some of these key support levels right here. So the first one would be around 49. And then you got another one here that it's testing, but it hasn't broken yet at around 42. So watch those two levels there. In terms of a long-term trend line, let's see if we got one to work with here. You got a little bit of a one there that may come into play at around $39 to $40. So keep that one in mind as well. Not a lot to work with on this chart. I mean, it's been in a free fall for sure, going from over 57? Yeah, 57 down to 43. So again, these are reasons to use stop losses to plan out your trade before you ever get in, because if you start trying to plan out the trade after you get in, you got emotions that you're dealing with and you're going to be like, oh, I don't want to take that kind of a loss. But if you say, okay, before I get in, I'm going to mark it out and I'm going to stick to it, and you do that, you'll be better off for it. All right. KMI, another guy here from the oil sector. A little bit more of the consolidation type. Some resistance going all the way across here. It's tried to hold it or tried to break out above it, and it can't hold it, and then it broke out again, couldn't hold it again. So, got a little bit of a rising trend line there going back to November of 2020. So there is a scenario where I could see $17 getting tested. Been talking about this one a lot lately too. Check out wheat, man. 1136, up 4.12%. The wheat fund. This one's breaking out. It broke above this price level here today, just barely, and then it also broke through this declining trend line right there. So wheat's pretty good, worth keeping on the watch list. Yeah, sometimes I'm not sure which chart you might be talking about, the one on the Qs, but yeah, you can have a lot of, it's not uncommon to have diagonal necklines. Yes, Alex, you can swing trade in this environment. Here's the thing. You got to pick and choose where you're getting long and short at. Like I said, I haven't made a trade since the end of the month of last month. I wish I was in a trade right now. I'm trying every day to get into a trade, but there's going to be times as a swing trader where you just simply aren't afforded those opportunities, and that's okay. Swing trading doesn't require that you have to trade every day, not even every week. There's plenty of times where I go a whole week and I don't trade. It just kind of sucks when, you're getting big moves, but the reward risk ratio isn't adding up into an actual trade that you can take advantage of. I even tried today with SPY. That would have been a swing trade, didn't materialize, so I never got in it. But yeah, you can definitely swing trade. I think the more leveraged ETFs that you get into, the more risk that's going to be associated with it, especially in this environment. Like, for instance, if you're taking SQQQ overnight, and let's say something happens where, you get the Fed put or something, or Fed decides to change policy because they don't want this market to completely fall apart, then you might be looking at, a 5% rally in the pre-market and you're down 15% before the market even opens. So I've done a number of 2-to-1s, haven't done really any 3-to-1s, and really don't expect to do any 3-to-1s here for a while. Coinbase, got to ask you about this one. Is there any hope for a long-term investor like me? What a train wreck. Yeah, Coin is really, oh gosh. It's like, I've looked at this thing multiple times. It just keeps looking worse for some reason every time I look at it. But I don't know. This one here, you had some major support levels along the way, right? That was a major support level. Then you had this one. This is where it really started falling apart, when it lost that area there, and then it broke the March lows, and then it just turned into a complete free fall. It's also the reason why holding a stock through earnings is one of the worst things we can do as traders. Now, investors, if you're going to hold something long term, you have to hold through earnings, just because that's what a long-term investment is. You're holding a stock for the long term. But this coin here, I don't know. From a trading standpoint, it's just reaching levels that no one's ever seen before. SMH, very similar for obvious reasons. SMH is the semiconductors ETF to the NASDAQ 100. You got that head and shoulders pattern. It's confirmed. So hopefully I can do the math in my head here. 248. I was a political science major, so that doesn't help. 248 to 52 plus another 18. So yeah, about $70. So it confirmed around 248. So you could say like one upper 170s could be the target. I don't know if I'm actually doing that right. Again, I'm not good at the math stuff in the head all that much, but you do have a head and shoulders pattern. Let's just look at support levels here to be aware of. You got a little bit of a support level here developing. Let's tidy that one up a little bit. Potential that you see this support, and this goes back to what I was saying earlier about the NASDAQ. It's like there's so many support levels. You had this big rally in semis back in May of last year, and it never really looked back until it topped out at 318. But along the way, it never pulled back to any major support levels. So, you haven't tested this level in a long time. Can it hold? I don't know. That's the hard call. I don't know if it's going to put up a fight there or not. We've seen with the NASDAQ already where it's not putting up a fight on some of the old support levels. So it makes me a little bit scared whether or not it'll hold up here if the NASDAQ continues to sell. That was about SMH, actually. Sean K. Thank you, Sean K. Appreciate that. How do I think Shopify will go? So there's a number of stocks from a long-term perspective that are starting to get interesting to me, right? I think, and I'm not buying any of these right now, but they're going to be on my radar long-term. I think DraftKings, I don't think there's a lot of people that are going to have disposable income when you have interest rates at 8%, but if that thing goes down into like single digits and you can get that thing at rock bottom, maybe worth it. I think there's going to be sports gambling that'll be much more prevalent throughout the United States and maybe across the world. But so DKNG is one of them, and I'm not pulling up the charts, but Spotify is one of them. I think that's a big one, and then of course Shopify is another big one. But again, I don't think I want to be looking at these things right now. And holy cow, it's like this sucker was trading at 1,700. What, late November? 320. I mean, this is what happens in these bear markets. Stocks, when they get like frothy like this, I mean, it's a disaster when they come back down to earth. And the cool thing is, it's not cool in the moment, but there's a lot of people now that are going to become much more respectful towards risk and what it means to a stock. They're not going to just FOMO into these kinds of plays down the road, or hopefully not. But for Spotify, you could almost say it's testing a major support level right now. And it comes down to, can it hold? Well, it's a very old support level. Let's pull up the weekly chart. It'll make it a little bit more clear. I got to make sure I'm not covering it up with my face. Did it break it though already? Boy, it kind of looks like it broke it, guys. I would say it broke the support level. So then we're getting like into the time periods that we've really not ever seen before. So like, does this support level hold? I don't know. If that other support level held, I don't know what's going to hold. I think at this point, you almost have to just wait to see where it bottoms out at before you consider a long position in it, because these kinds of sell-offs are just ugly. This is a falling knife right here. And if you try to catch it at any point until it finally, forms a base and starts to rally and the market can start to rally, you're really playing with some in some dangerous times here. So PYPL. Prime for a bounce of this market rally. Yeah, I think a lot of these stocks are going to bounce if the market rallies. PayPal is actually, I like PayPal. In terms of a company, I think they do a lot of good things, but that support level broke. That support level broke in just ferociously. But again, you got old support levels there. Can it? Let's pull up the weekly on this one. Need to draw that sucker better, don't I? Yeah, I think it's broken that one too. So it's like, holy crockies. Steve Irwin, the animal guy, rest in peace. Yeah, maybe to 50, 55. Crazy, right? But where else is it going to go? It's not respecting any support levels here. So, and that's me. What do I think about NIO and CHPT? Skyheart, I just talked about LCID. Actually, I just skipped a whole bunch of you guys by accident there. Let me back up here. Where do I see a bottom in Bitcoin? Let's pull up the Bitcoin chart here real quick. So Bitcoin, it broke through this rising support level. That's a problem, okay? Big problem. Whoops. Transferring platforms is like one of the biggest pains in the world. Just because I start trying to do what I did on TC2000 with Bitcoin. But anyways, that broke. So then the next level of support becomes exactly where it is trading at right now. Can it hold this mega support level? It's at about 28,000. It needs to hold 28,000. Or once again, you're dealing with a lot of problems on your hands with Bitcoin. Where does it go to from there? Could we look at something that takes it down to 13? I don't know, but there is not a lot of support level. If it can do this, where it goes straight up, guys, it can go straight down too. So there's a lot of froth in this market, from NFTs to crypto and everything else, and the individual stocks, and it's getting obliterated right now. So yes, Bitcoin needs to hold that 28,000, or it's going to just keep getting uglier and uglier. All right. NIO. We haven't talked about NIO. Let's go ahead and drop that chart. And like Plug, like LCID, these EV stocks decimated. And I think that's like the word of the day, decimated, because there's just nothing that's really surviving. I think with, and there's not a lot of support to work with at this point. Let's see where it's at. Did we break the lows there, 1301? Yes, we did. So yeah, we got a problem with NIO. It broke lows, so it's forming lower lows. We got lower lows here, 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 here. We got higher or lower highs here and here. I mean, all over the place, right? So what is that? That's a downtrend. And it doesn't end until you can put in a new lower high. And right now, that is yet to happen. We just put in a lower low today. You got this declining trend line. So even if I wanted to get bullish, let's say if it kind of reversed here tomorrow and it maybe started putting in a look of a quasi double bottom play, would I play it? Not until I wouldn't even consider it until it got back above 1925. And right now, I think there's so many good discounted stocks that NIO probably wouldn't be at the top of my list. Okay, so Alex got into Microsoft at 264.41 with a 3.8% stop loss. What levels would you start to scale out at? All right, man, I forgot to turn the phone off here. My bad. MSFT. All right, so head and shoulders pattern there. You got it at 264, so it's starting to take a hit at. Well, I mean, for me on stop losses, I mean, everybody's different on their stop losses, but for me, if a stop loss gets, I go ahead and get all out once that stop loss is hit. Sometimes I will scale out to the downside, but mainly that's because I just trying to reduce the risk on it because it's starting to get too much relative to like what the overall market's doing. Like if I'm starting to worry about major gap downs, then I'll start to scale out. But right now, I mean, with that head and shoulders pattern confirmed and we're breaking through this support level there's not a lot of reason for me to want to be long on Microsoft. I mean, it just looks really problematic there. PEO. What do we got here with PEO? This is the guy that's teeth is hurting from being in cash, man. There's a lot of people that would swap places with you right now. PEO is really good, right? I mean, you got a nice rising trend line going all the way back to October of this year. That's really solid. I mean, this is one of the best trend lines that you're going to see out there right now, and you could probably even do a rising channel with it. So that looks really good. You can see it's kind of been hitting its head against this upper channel band. It's done it about 3 different occasions. If I'm looking to get into the stock, I'm looking at, the test off of this $18 level, off of this rising trend line. The other thing to watch is, okay, you got some history with this 50-day moving average where it likes to bounce off of it. Today, if you zoom in on it, it's closing right below it. So if it can't recapture that tomorrow, that would probably be a red flag for me to get out of it. All right, did I do CHPT? Let's talk CHPT. Yeah, this is it. Holy cow. This is just kind of like uncharted water. I mean, at this level here, when you're breaking those lows from January and February, I mean, you kind of, I mean, I after that place, it's just like it's uncharted territory. It's like, where does it go? I don't know. Projections for SPY by the end of the 2023. Golly, that's far out, man. I'm just trying to wonder what it's going to do by the next month. Who knows, man? I mean, you look at 2000, that was a sell-off that lasted for about 3 years. You look at 2008 through 2009, that was about a year and a half almost. But then they started getting quicker and quicker and quicker because the Fed was so accommodating. Like 2018 was like a month, 2020 was like 3 or 4 weeks. So actually, I think it was like 4 or 5 weeks. But in any case, though, 2023, I mean, you could have a change in Fed policy by that point. You could have escalated, war tensions. Who knows? I mean, I think one of the biggest things that we can do as traders is just follow the charts and see where it takes us. Good deal, KB. Yeah, I mean, you got to use those stops, man. Alex has got some Buffalo Trace. I picked up some Buffalo Trace yesterday for $23, but this is Thomas S. Moore here, man. It's not bad. I can't remember what I scored it at, but if I had to score it right now, I'd say, without spilling it all over myself, probably like somewhere in the sevens, like a 7.2. How much are you expecting the markets to fall today? Well, we already had the markets today. Does the upcoming days look bearish too? No, I mean, I think we're sitting in a situation where I think there's a decent chance for a dead cat bounce, but it's important to let that bounce to start materializing before you just assume it's going to happen, because otherwise you're trying to catch knives, and in this market it's like a couple dozen knives you're trying to catch without getting cut. Barry Sycamore, man, he's sobered up a little bit in regards to risk. That's great. Look, these sell-offs, I mean, they hit the capital hard. The reason why it hasn't hit my capital hard is because I've had to learn from other sell-offs, because I've been doing it for a while. I've experienced these same things, but I experienced during different time frames, or during different eras, and it taught me then, and I'm able to apply what I know from then to now, and that's really what's benefiting me right now. Joel wanted to know what platform did I change to. I changed to just a second ago when I was looking at Bitcoin. That was TradingView. So not bad. I still prefer TC2000. Let's see here. NIO is scary because it's a Chinese company. I agree with Barry there. I mean, there's still a lot going on with there. And then you got the shutdowns and everything. How does that affect, their production and research and development and everything else? Ricardo, you want to know something about BCP, huh? Holy shnikes. Trend line's broken. This support level is looking pretty sketchy here too. It looks, yeah, we broke that one a long time ago. And then, so we're in a free fall now. So you're starting to ask yourself, okay, where do we fall to? So maybe around this 110 area, there's some support that might start kicking into high gear. Trying to draw that one as best I can. Maybe like 108, 109. Can it bounce off of that level? If it doesn't, that becomes very problematic for the stock as well. It's already problematic, guys. I mean, when you're seeing these kinds of sell-offs, this is where, the risk management, it's either you're doing it beforehand before it ever starts to happen, or you're just getting destroyed. No, I think a lot of people are starting to get really depressed about this market. I think a lot of people are getting crushed. Yeah, I mean, the contrarian side of you would be to like buy when everybody's like freaking out and everything. That's the whole Warren Buffett thing. But with that being said, the bear markets can last a whole lot longer than you would expect it to, and can make people more desperate than you realized. I mean, there was times in the past where people were hurling out the windows of Wall Street. So I don't think we've reached that point yet, but I mean, it does happen. TLT. Good little rally there today, huh? Makes you wonder, are we going to eventually see a retest of this rising trend line in TLT? Could. I mean, that would be kind of what I'm aiming for at this point, maybe like that 106 area. You've had other trend lines and they just got shattered in the process, but this one in particular was of interest to me. And it never held. I mean, it just sliced right through. At least we're just slicing right through. We're not like lollygagging around these support levels. We're just blowing right through them. So this was a much needed relief rally today for TLT. But yeah, at this point, I would be looking for like maybe 106. That doesn't hold, maybe a retest of these lows from 2013. But we haven't even started, unraveling all the assets on the Fed books right now on the balance sheet. So who knows what that's going to do to a lot of these debt instruments. Ford. And we'll close with Ford, guys, and then I'll give you guys a quick wrap up and maybe a little pick me up. Ford, this was a trend line that I was watching, and it's long past, blown right through it, but broke through that trend line, and then you had another one actually that I was more interested in. This trend line right here, this one looked promising, man, and it just got destroyed as well. So 2 trend lines, both broken. This goes back to the 2020 lows. Now you're just kind of like, all right, man, where in the world are we going to find a bottom at? Maybe. This is how I go through my charts, guys. I mean, I'm always looking through charts and trying to figure out where's the edge sit. So maybe with Ford, and this goes all the way back to what, 2016? Can it go back further? No. 2016, it has some support. This is now the weekly chart of Ford. Maybe we got $12, $12.15, $12.16 before it can bounce. But in any case, that was a lot, guys. We almost went a full hour there, but really tough times for a lot of traders right now. The less you're trading, the better off you are, even, whether it's short or long. To the short side, when I'm getting short, I'm not getting more than like 20 or 30% short. And there's good reason for that. The main reason being is because there's so much volatility in the market right now. I don't have to be like 100% long. I don't have to be trading like a 3-to-1 inverse ETF. I can reduce my risk and still get some really nice gains because the market is moving with so much vigor right now. And so that has been a huge help to me as a trader, and trading less, trading fewer, and not forcing trades. And that's one of the big things I would tell you. And if you're looking at getting into a trade in the future, plan it out. Plan it out. Know where you're going to get out before you're ever going to get in. If the trade goes against you, why do you want? Where would you say, okay, this is where I think the trade's gone bad. This is where I wouldn't want to be long at anymore. And then stick to it. Trading requires discipline. You can't expect to succeed or be profitable if you're going to trade undisciplined. And it's easy to become very undisciplined in really good bullish markets like what we've experienced over the last 13 years. But when the wheels start coming off, that's where the discipline pays, because you don't want to give up years and years of profits because you are undisciplined. All right, guys. Alex says it best. Thanks, Ryan. You helped me stay green. That's really what I'm trying to help everybody with right now, navigating through these markets. Doesn't seem as bad for me just from an experience standpoint, but I know for a lot of you guys, it's a brand new phenomenon, something that you've never seen nor even imagined could happen in the future or even now. So I'm here with you guys each and every day, willing to help you guys out. So make sure that you guys subscribe to this channel. Pound that like button. That'll help me support this channel in the process, and we'll get through this market together. Thank you guys, and God bless.